Good morning, Gerard. This morning, IPF delivered its full year results for 2016. How would you summarise the group's performance for the year?
Well, it's been a particularly difficult year for our shareholders and for the employees in our business. We delivered a profit before tax of £92.6 million, which was down on last year, principally because of reduced profits in home credit, but also because we invested more money in our new digital operations. Now, we had great growth in Southern Europe, and our new digital business did tremendously well, with over 40% growth in the loans that it issued. But clearly we had a very difficult start in Mexico, which is one of our largest businesses. But I'm delighted to say in the second half of the year, the local team there turned that around. So all in all, I would say a mixed year, particularly difficult at the end of the year because of new regulatory changes that were announced in Poland that really have everybody on edge. But in terms of the results, broadly in line with what our expectations were.
How are you responding to the growing competition and the ongoing regulatory challenges?
Well, it's become evident over the past 18 to 24 months that banks and other players in the market, particularly payday lenders, are willing to come down into what I would describe as our segment of risk. And they're willing to take more risk at a lower price. Now, what that means is that some of our best quality customers are disappearing to the competition. So in terms of reaction, we've done three things. First of all, we've broadened our product set, we've introduced new channels, and we've optimized the businesses in Europe for returns. So in terms of the broadening of the product set, we now offer cash loans on a weekly basis, but also a monthly basis. And in addition, customers can get those loans directly into their bank account. We have micro-business loans in a couple of our countries that are doing really well. And we offer third-party introduced insurance products. In addition, in our digital business, we also offer a credit line, which is a new product for us and one that I think will be tremendously successful in the future. So those are the changes that we've made in terms of the products. Now, on the channel side, we used to be go-to-market only through agents, but now you can come via an agent online, and online can be via an app or on your computer. You can also access us through affiliates and through brokers. So we've really broadened the number of channels that customers can come and talk to us through. And then finally, in terms of optimization in Europe, those businesses are more mature, they have less growth in them now. And so what we're really doing is trying to take cost out there and make ourselves more efficient. And the returns that we get out of those businesses will then be used for shareholder return, in addition to investing in digital and in Mexico. And then finally, on the brand front, which is important for us, we were a single brand company, which is Provident, a tremendously successful and well-known brand. But now we also have Credit24, Sving, Creditea, and Happy Loans. We're also extending the number of faces that we show to the customer to make ourselves more attractive there.
And the outlook for 2017?
Well, whether we like it or not, the outlook is dominated by the proposed regulatory changes in Poland, and something that we're currently working our way through. The unfortunate thing is that those changes came as a surprise to everybody, not least parts of the government in Poland. But I'm happy to say that we are in what I would call really constructive dialogue with various government ministries in Poland, and we're hopeful of a better outcome than the current proposal. So that is one thing that we're having to deal with, but something that's really, really important to our business. In addition, we will continue the optimization program in Europe because that's very successful and is delivering lots of savings to the business. And we expect to see further growth in digital and in Mexico. So a lot for us to work on, but a lot of opportunities.
Good morning, Justin. So we just heard from Gerard about the group's results for 2017. What are the key drivers?
Well, good morning. The group delivered a PBT in 2016 of £92.6 million. Which was £23.5 million lower than in 2015. The key constituent parts of that profit movement were a reduction in our underlying profits in our home credit businesses of £34.1 million. We invested an additional £4.7 million in our IPF digital business, where we see good growth opportunities. And we had the £15.6 million benefit arising from stronger FX rates. Now, the key drivers within that were credit issue growth of 8%, which led to revenue growth of 1%. And that rate of growth was lower than credit issue growth because of longer term lending and tighter price caps. Credit quality was stable, and impairment to revenue increased slightly to 26.8%, and that was principally due to higher levels of impairment in Mexico. But overall, impairment remains at the bottom end of our target range of 25 to 30%. Our cost-income ratio increased by a couple of percentage points to 43.6%, and that reflected increased investment in IPF Digital. So overall, we delivered a profit of £92.6 million.
So you've reported strong growth in your IPF Digital business, and in September you opened in Mexico. What is the investment required to execute your growth plans?
Well, IPF Digital is a core strategic opportunity for the group and represents a fantastic growth opportunity due to an increased demand for digital loans and the population potential of our new markets. Credit issue growth in the year was 41%, and that reflected good contributions from both our established markets and our new markets. Our established markets delivered strong profit growth of £8.4 million to £12.4 million during the year, and this enabled us to invest heavily in our new markets, where we delivered credit growth of 370% and a similar rate of revenue growth. We plan P&L investment in 2017 of £8 to £10 million, and we now expect the division to deliver its maiden profit in 2018.
Justin Lockwood, Chief Financial Officer, thank you very much.